Hey folks, going to do a quick video on the Fibonacci extension levels and also the retracement levels. So there's two different ways that we can utilize this tool, but if you go to TradingView, it's just here on the left. You just go down three below the pointer, two below the pointer, so the third one down, and you just hit Fib retracement. So for using Bitcoin as an example, so there's multiple ways that we can track. We can use it to track bull flags and bear flags as well. So it's useful in that regard. It's just a way of telling how much we've pulled back. So if we pulled back more than 33% of a move, it's generally not considered a bull flag. A bull flag literally just means that it resembles a flag. You have a pull and then a pullback, meaning we broke the low of the previous candle. We start that consolidation and then we see a bull flag confirm. So you could say that we were technically in a bull flag here from 3,800 on Bitcoin if we would have held that 3.82 retracement. So that is the Fibonacci tool in this case when we use it when we're trying to determine a retracement. So retracement just means we're pulling back and it's breaking the lows of the previous candle. So in this instance, let's say when we were pulling back and retracing, if we would have held that 0.32 at 41,000 here on Bitcoin, it would have been a potential bull flag. But we lost it and we came back and we retraced to the 0.5 level, which is 50% retracement, meaning we pulled back 50% of the move from the swing low to swing high. So you go from swing low, swing high, and then you can do that on the way down as well. So you can go from swing high to swing low. So that in this example, if you're using it for retracing, you would go from swing low to swing high, and you want to know, okay, why do we want to know that? We want to know because we want to know when the consolidation is going to take place and when it's going to end, right? And we know that it's the swing low and swing high when we lose the previous candle, right? So in this case, we go from swing low to swing high. We never really saw any monthly consolidation. So if we just go here from swing low to swing high, then we can see that we're going to likely be pulling back, and then that's exactly what happened. We lost the previous monthly candle, so we started monthly consolidation. So at that point you say, okay, there's our top, it's in. We had that reversal candle, that bearish reversal in doji there, and a huge upper wick, so likely indicated that we were going to expect monthly consolidation. And then when we lost that low at 47,000, that confirmed monthly consolidation. If you just exited on that signal alone, that would have saved you about 42% of downside. So like I said, just a way of utilizing it on the way down when we're looking for a retracement level. So now we want to know, at this point, we want to know what a swing low to swing high to swing low. So if we're using on the swing low to swing high, we're just using it for retracement levels, and we're using these golden pockets. So the 618 is referred to as the And if you were looking to add around those levels at that 618, look where we got to. If you would have been adding Bitcoin there around that golden pocket, which is usually an area, a very common area of retracing, you could have been loading up around that 618 and just holding, and there you go. You would have been up just from following that classical technical analysis theory. You'd be up 140% from that level on Bitcoin just from back in June. So now we'll go through the example of using it on the flip side. So you can go from swing high to swing low, and that will give you the Fibonacci extension levels of what we can expect if we were to enter a new bull market. So you go from swing high back in 2018 on Bitcoin to the low here at 3,128, and then just slide it over here so that you can see the whole thing expand, but make sure you're lining up with that level there at 3,128. And then look where we basically ended up, right? So we're hitting the 3.618. So that's why I think that we could see one more final leg up and target that 4.618 level at 80,000. So again, if we just look at some other names, just play around on different time frames, the same thing. If we go from swing high to swing low here, the $80 area on Ethereum, well, look where that targets. So the 3.618's right there at 5,000. And the 4.618 is there at 6,500, 6,400 essentially. But it's not uncommon for stocks or cryptos to exceed that 4.618. We have all these different types of levels that we can use. So you can go here into the settings and you can enable them. You can go all the way up even further than that. So like I said, those are just the common ones. And it's just a way of telling when something is retracing, when it's pulling back, we can see how much it's pulled back and when it's likely going to bounce. And then when something is pulling back, we can use it on the flip side. So like I said, swing high to swing low. It takes a little bit to get it down. But like I said, when we're consolidating and we're in a bear market, that's when you go from swing high to swing low. And that's when we will know what sort of targets to expect in the future. And then, like I said, if we are going from swing low to swing high, you're using the tool as a way to gauge when the pullback is going to end, right? So it's just a way of knowing how much we're likely going to pull back, way of telling if we're going to see bull flags as well. You can also use it as bear flags, right? So if we were to pull back here, so you could use it, let's just go into the daily time frame here. So as a bear flag example, just reset that chart. So right here, so we would say on this dip here, there's a better example. Might be easier on the hourly time frame here. Yeah, so here we go. So we go from here to here, so swing high to swing low. That was a perfect bear flag, right? We didn't get over the 0.382, meaning we only retraced about 33%, and then we went from high to low to the high, which is at the 3.82. That met the criteria for a bear flag, and generally that means we're going to see more downside. And look exactly what happened. If we take the measured move, you'll get something around that area, right? So it didn't quite exactly get to that area. It hit 44.55 and then bounced, but now look where we are. It was saying that we were likely going to hit 4,300, and here we are at 4,300. So sometimes you get those fake outs, right, where things will just bounce around for a bit and then go sideways. And look, we had a huge upper wick, and then we had another huge upper wick and reversal, and then a pretty nasty pullback here. So this is what happens, right? Nothing goes straight there in a straight line. It could have went straight there, absolutely. It's just probabilities, right? But when we were looking at this bear flag here using the Fibonacci tool, we knew that we were likely going to be seeing more downside because of the inability to get over that 0.382. So hopefully that helps. If anybody has any further questions regarding that, just let me know.